It looks simple. Soap, water, dryers. 3 minutes later, the car drives away. But behind that short cycle is a business model capable of producing steady, predictable cash flow, sometimes millions of dollars per year, from a single location. Car washes don't look impressive. They don't feel innovative. There's no breakthrough technology. And yet, over the past decade, they've quietly become one of the most aggressively consolidated small business sectors in America. So how did washing cars turn into a scalable investment platform? Let's break it down. For decades, most car washes followed a traditional model. They were full service, labor-intensive, dependent on walk-in customers. Revenue fluctuated with weather. Margins depended heavily on staffing. Growth required opening entirely new locations from scratch. It was a decent local business, but it wasn't scalable. The real shift happened with the rise of the express exterior tunnel model. Instead of offering full interior detailing, operators simplified. Cars move through an automated tunnel. Machinery applies soap, brushes, wax, and drying systems. A small team supervises the flow. The result is speed, volume, and dramatically lower labor costs. But automation alone wasn't the breakthrough. The real innovation was psychological: subscriptions. Instead of charging $15 or $20 per visit, operators introduced unlimited monthly memberships. $30, $35, sometimes $45. Unlimited washes. At first glance, that sounds risky. What if customers come every day? They don't. Most members wash once or twice per month. Some 3 times. Very few maximize the plan, but they pay every month regardless. That shift turns an unpredictable retail operation into recurring revenue. And recurring revenue changes the economics of the business entirely. Let's look at the numbers. Imagine a modern express tunnel in a strong suburban corridor. Assume the location processes about 150,000 cars per year. Out of that traffic, suppose 2,500 customers are enrolled in monthly memberships. If the average membership is $34 per month, that's 2,500 times $34 equals $85,000 per month, or just over $1 million per year, before a single retail customer is counted. Now add non-members. Let's assume 50,000 retail washes annually at an average ticket of $20. That's another $1 million in revenue. Combined, this single location generates roughly $2 million per year, and in stronger markets, it can be even higher. Now, consider expenses. Major cost categories include property lease or mortgage, utilities, especially water and electricity, cleaning chemicals, equipment maintenance, payroll for a relatively small team. Modern express washes are highly automated. Labor often sits below 20% of revenue. Utilities and chemicals, while meaningful, are modest relative to pricing power. Altogether, operating expenses typically land between 60 and 70% of revenue. If this $2 million location runs at a 35% operating margin, that's $700,000 in operating income. For a physical, location-based business, that's strong. There's another powerful dynamic at play: operating leverage. Once the tunnel is built and the fixed costs are covered, each additional car has minimal incremental cost. The soap per wash costs very little. The water usage is controlled and recycled in many systems. So when membership numbers increase, margins expand quickly. If membership grows from 2,500 to 3,000 customers, revenue increases significantly. Expenses barely move. That widening gap between revenue and costs is where real profitability happens. Of course, there's a barrier to entry. Building a modern express tunnel requires serious capital. Land acquisition can range from hundreds of thousands to several $1 million, depending on location. Construction costs often fall between $2 and $4 million. Equipment can add another $1 to $2 million. Altogether, a new build can easily cost $5 to $7 million. But once stabilized, that asset produces recurring revenue. And stabilized locations often trade at 6 to 8 times EBITDA. A $700,000 income stream valued at 7 times earnings implies a valuation near $5 million. Scale that across multiple locations, and the numbers grow quickly. This is why private equity entered the space. For years, the industry was fragmented, independently owned, locally branded, operationally inconsistent. Investors saw opportunity. The playbook is simple. Acquire independent washes. Standardize branding and systems. Increase membership penetration. Optimize pricing. Centralize marketing. Then bundle locations into regional platforms. 10 coordinated locations are more valuable than 10 standalone businesses. Scale commands higher multiples. It's not about washing cars. It's about building a recurring revenue platform. There's also a subtle retention advantage. A $34 monthly membership feels manageable for most households. It's more than a basic streaming subscription. But it's still small relative to car payments, insurance, or fuel. Customers view it as maintenance, not luxury. And once enrolled, inertia works in the operator's favor. Even if usage declines, billing continues. That steady retention compounds profitability over time. Of course, risks remain. Weather can impact short-term traffic. Heavy rainfall reduces immediate retail visits. Oversupply in competitive corridors can compress pricing. High debt levels can strain cash flow during slower periods. And poor site selection can permanently limit volume. Like all real estate-adjacent businesses, location and discipline matter. But when executed correctly, the model is resilient. People continue driving, cars continue getting dirty, and recurring revenue continues flowing. Car washes aren't glamorous. They don't disrupt industries. They don't trend on social media. But they convert a basic, repeatable need into structured, predictable cash flow. Through automation, subscriptions, and consolidation, a simple neighborhood service becomes an investment platform. Not loud, not flashy, but effective. And that's the pattern we study on Silent Capital. Businesses hiding in plain sight. If you want to understand how ordinary assets quietly generate extraordinary returns, subscribe. Next episode, we break down another overlooked machine printing cash.